Hello, everyone, and welcome to another episode of the Investor Financing Podcast. We have John from Toro Real Estate Partners. He's been in real estate for a long time. He's got an interesting background, was a sales advisor for Marcus and Millichap, specializing in multifamily. Then went out on his own, and I'm sure that experience there kind of cut his teeth, and he realized that, hey, instead of making money for everybody else, let's make money for our own investors. And he went on his own. They have done over $250 million in transactions, own a lot of properties in the Southeast, South Carolina, North Carolina, lots in Jacksonville, Clarksville, Tennessee, Columbus, Ohio, some Kentucky. So nice diversity of your portfolio. Welcome to the show.
Hey, Beau, thank you for having me. I'm excited to be here and hopefully can provide some value.
Yeah. So when you were working for Marcus and Millichap, you were selling in Brooklyn and Queens. And at what point did it kind of click in? Did you just realize, hey, I'm doing a lot of work here, and I could be on the buy side? And how'd you transition? Were you building investors at that time already?
So I actually knew before I even got hired. I was already invested in real estate prior. So I had bought a ton of tax deeds in Pennsylvania. I'd done a couple fix and flips, and I was in finance prior to getting into real estate. So I left my finance job because I wanted to focus on something I can control, which was buying property, right? And then so I was very good at raising money and that avenue. When I finally made my way to Marcus Millichap after interviewing at a ton of different firms, I actually told my boss, I invest in real estate on the side, but at that time I said, I'm not going to buy anything in New York. So I didn't think there'd be any, let's call it conflict. But really shortly after that, making cold calls, meetings, and all of that added up. And I started talking to my clients on meetings, talking to people on the phone about why they were doing it. I saw the same property sell 3 times in 1 year. And I just said, as a broker, as an agent, you're only as good as your last deal. When I had a fix and flip going on, I had a couple other deals. And I said, if I'm selling multifamily, I understand how to do it. Why don't I just go buy bigger properties myself? So when I sat down on my interview and when I ended up leaving Marcus Millichap, and I sat down with my boss, he knew immediately. The first thing he said, you're going to go do this on your own, which he had a feeling was going to happen. Another thing, I had a mentor there that when you get hired, you work for one and they sort of show you the ropes. That guy quit about 2 months into me being hired. So then my boss became my mentor. So it was like the perfect synergy, and it was a great stopping point that just springboarded the career that, okay, now I have a really good understanding of multifamily. Let's go take what we've done in the past and merge it together. So I knew actually the day I got hired that I wouldn't be there for a long time. I thought I'd be there for a lot longer than I was, but I never was a have a job type of guy. So It was sort of just a short period of time, but I knew it was going to happen.
So when you were doing tax deed, tax lien, you were basically so like some states are tax deeds where you get the property. Some are liens where you would get a certain percentage on your money, and then if they don't cure it, then you can eventually foreclose and take it. So Pennsylvania is that a tax deed state?
So it depends on the county. There are some counties that you can go and just buy the deed at the auction, and it's yours. Then Philadelphia is where I did it. In Philly, there was a short redemption period if the property was owner occupied prior to the auction. So it just depended if it was owner occupied or not, if it was vacant or not, if it was an investor property or not. So it depended on the property, but there was a period of redemption only if it was owner occupied prior to the auction. I think it had to be 6 months at that point in time.
Can you tell us about a kind of a home run deal you did back then?
Yeah. So I have 2. One, I bought a property that was easily low 6 figures. There was a tenant in it, what I thought was a tenant. It was actually the nephew of the owner. And when you buy them, the firm that represents the foreclosure or the tax auction, they actually represent, when you go to court, I bought the deed, but they argued that they had a 6-month right of redemption because they was owner occupied. But even though it was not owner occupied, it was the nephew lived there. We went to court. I showed up. I didn't have to be there as the person that bought the deed, but the attorney that represented the auction represented the state basically selling it. And then they had an attorney and I was the investor. And the judge actually told everybody, they said, I suggest all three of you go outside and make a deal, because it's not going to end well for the homeowner who said that she was living there, even though she wasn't. And we were actually represented by not represented, but the lawyer that represented the tax auction did a really good job finding out that she was getting mail at another address, so on and so forth. So I ended up buying the house. The delinquent taxes were like $6,500. And then we went outside and we had a negotiation, and the homeowner basically said, they tried to say they were going to fight it, and they'd win. But we basically came to an agreement, and I ended up getting like a $75,000 check within a week of the tax date. The judge basically said, okay, come in, next week you'll be on the docket. You better have a settlement here or he's going to get the property. So instead of fighting it and all that, they gave me a $75,000 check. But my biggest win was at the auction when I first started. So that was like $6,000, $7,000, $70,000, great deal. At the auction when I first started, you could pay in cash. And you only had to put 10% down or $750, whatever was greater. There was a vacant lot that was for sale, and we offered on it, and it's a bidding war like anything else. There's two people standing, bidding. One guy outbid me, goes all the way up to like $25,000, goes to pay. He's short the 10%. So he actually runs over to me in the auction. He's like, do you mind making up the difference and I'll pay you for it? And I'm like, I don't know who you are. We just met at an auction. So he couldn't afford it. The house goes back it was actually a vacant lot. The lot goes back to auction. I ended up getting it for like 10 grand. I put down $1,000, and then you have 30 days to pay the balance. The guy that bought it for 25 ends up coming over to me and says, come to my office. I have cash. I'll buy it from you. I would have went all the way up to 40. So I ended up selling it for less of a profit, but a couple hours later, I bought it for $1,000 and sold it for 40. He gave me a $40,000 check. I held the deed to make sure the check would clear. Check cleared. I sent him the deed. He bought the property, and that was probably my biggest win, because it was within a couple hours as opposed to the other one, which took a little bit longer.
Do you ever dabble in that anymore, or you just, because you're doing such big deals now but that seems kind of fun?
It was. So if I look back, it was an awesome time. It was about 2 years. Going back and forth to Philadelphia. I would drive there early in the morning, drive properties, and then drive home, and then drive to the auction. I was still working, so I couldn't just stay there and do it. I haven't done it in 6 or 7 years probably, but it was awesome while it lasted. And not that it doesn't last anymore, just we're just doing different types of deals. And occasionally I'll get the emails, all the sheriff sales going on, and I'll look at the properties, and what I look at is, oh wow, I bought that property for $4,000, I sold it for 30, and now that property, is $180,000 property. So I just look at it from the standpoint of, maybe I should have held a couple of them, but it was really fun to learn real estate with very little downside risk, right? You're buying properties for 10%. I would, after the auction, go drive the properties, and I have a locksmith open the doors. Wasn't supposed to do it, but we would get into the properties, realize like, oh, this property's a gut rehab, and it ain't worth what I paid. And then vice versa, you'd walk into a house and there was a tenant already paying rent, and I'd show up and say, hey, this property just went to sale. Are you looking to stay here? So on and so forth. So it was really good to learn the business and, put yourself in a situation that most people probably, some very difficult situations and stuff like that. But it was fun, but I haven't done it in quite some time.
Mm-hmm. Yeah, that's a pretty cool story though. Thanks for sharing. So, you have a substantial holding right now. It looks like Jacksonville is like kind of your big market. Can you talk to us about a little bit about like your kind of thoughts on the different markets you're in and why you're in the major markets you're in right now?
Yeah. So the two biggest thing, what used to be larger when I first started, 10 years ago, was job growth. You wanted to follow the jobs because people need to be where their jobs is. COVID's, it changed that where, there's a lot more remote work, but we picked the markets we picked based on, strong economic drivers, really good jobs, really good population growth, and supply and demand. Those are the three things that we look for. Where there's a major demand and no supply, you're going to do really well. Where unemployment is really low and people are working, people are going to want to move there. People are going to want jobs there. As population grows, supply and demand is in your favor. I think that goes for all walks of real estate, not just multifamily. but in every product type that's out there, regardless of rising interest rates and any of that stuff, if there is a major demand for product and supply, you have a lot longer runway than if it's not, if there's an equilibrium or more supply than demand.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau Eckstein here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. Are you still pretty bullish right now? Like you're in acquisition mode? Are you kind of 50-50 in this cycle? Are you exiting out, or are you taking your properties full circle? Like
yeah.
What? So that's your.
Yeah. I would say that right now we're probably more. I don't want to say bearish. I don't like that word, but we're underwriting more deals today than we've ever underwritten in the past. And I say that with a little asterisk because underwriting in the past, was a really deep dive. It took a lot more time. Underwriting today is you call, you find out the seller's expectations, and you roll your eyes because the gap is widening between buyers and sellers right now, more so than I've seen in a very long time, where sellers still think it's 6 months ago. And now buyers, I think they could smell some blood in the water. So I haven't seen more listings than I've seen in the last 3 months than I ever saw prior, where there was always, deals were always getting listed and there was always off-market deals and stuff like that. Now it seems like every day there's 10 times the amount of deals on the market. Geographically in the Southeast and the Midwest, we're buying, we're offering, but we're cautiously optimistic. We are offering probably less than most, factoring in interest rates continuing to go up to a degree, factoring in there's a lot more pick of the litter. So, I don't have to buy that. There's not 100 buyers and one seller now. Now it's more equal. So you're seeing a little bit of a disconnect where, we listed properties over the last 2 years and you would get 30 offers. Now you're listing a property, you get 3 or 4 offers that are credible. So I think that we are bullish and we want to buy more, but at the same time, we are definitely not overextending ourselves. We will gladly sell deals when they become opportunistic to sell or refinance, and we will only buy deals that we really want to buy. We're not going to stretch right now.
Got it. And what markets are you eager? Like, what's your kind of market you're spending your most time looking at inventory right now?
Yeah. So right now, believe it or not, we're going back to my backyard. We are trying to get back into. I live in Long Island, New York. We're looking more here than we ever did in the past. Prior to that, it's always been the Southeast, the Midwest, really good landlord tenant friendly states. We're looking more here, trying to figure out if we can do some damage in our backyard. And then the your usual suspects. It's your top 20 more. Your Charlottes, your Charlestons, Jacksonville, Florida, basically from North Carolina down to Florida. If I had to put a weight on it, I would say the tax-free states. Tennessee, Florida, where you're seeing a ton of population growth.
And then you don't self-manage. You're using third-party management in these different markets.
Right now, yes, we started to transition, or we started to put the pieces in play to do that, self-manage, and then COVID hit, so we stepped back. I think as we continue to grow and as the market shifts a little bit, we will go back towards just trying to put those pieces together. We have some interviews lined up with some people to help us transition to in-house management, in-house everything. So right now, yes, we use third party, but we are definitely weighing the coin to see which route we're going to go.
What would be your advice to somebody who was wanting to maybe invest passively in a syndication on multifamily? There's a lot of syndicators out there. What's your advice to like vet operators?
You're betting on the jockey, not the horse, right? A good operator will take a bad deal and make it work. A bad operator will mess up a good deal very quickly. So although you may be buying a physical piece of real estate, you have to make sure the person running the show has done that business plan before and has proven to execute on that. Because you get yourself involved with a bad deal, a good operator will fix it. If you get yourself in bad with a bad operator, that's when communication, no distributions, business plan starts going sideways. So you definitely want to understand the individual running the deal. That's the biggest piece of advice I can give. Yes, you are buying a piece of real estate, and if it's in a good market, it'll probably play itself to the win, but you really are betting on the individual doing the day-to-day, because they get all the information first, and then as the investor, you get the information second. They know everything going on before what they tell you. So you got to make sure that they're making the right decisions on behalf of the deal, not on themselves.
That's really good. Now, what about somebody out there that wanted to maybe buy their first multifamily? They've been dabbling in they own duplexes, fourplexes, and now they're like, okay, I want to go bigger myself, maybe eventually syndicate. But what would be your kind of advice on moving up the ladder? How would you go back, and what would you coach yourself to do differently?
I would probably really get a really good operational team underneath me, so you don't have to rely on third party. As the market changes and deals start getting tighter, third party management, a $75 bill here, a $100 bill there, it adds up. So I would probably start with building out that team that I know I can trust to help me operate the smaller multifamily deals without the added costs of a third-party operation. You're still going to need leasing agents unless you want to do it all yourself, which I don't necessarily recommend. You want to have a really good team, so when you do buy that deal, you can run it really lean, because the leaner you run a deal and the better you can operate it, the more likelihood for success.
Awesome. And what about any other food groups or asset classes that you are interested in, or are you just strictly like, hey, our business models, this is what we're going to do for the next 5 or 10 years? Or have you been looking at anything else, any development, or what's on your plate or in the horizon for you?
Yeah, so for the last 2 years, we've been buying a lot of land. We are very bullish on the development space, supply and demand driven again. We are doing a ground up 45,000 square foot industrial deal right now. It's going to be flex industrial there could be the opportunity to add another 10, 15,000 square feet to it. We're just trying to buy some more land. And then we own mobile home parks and RV parks. That's really it. Multifamilies are bread and butter. We know that really well. Mobile home parks, RV parks, they're very similar. But the two other product types that we've been playing around with are land and industrial. Industrial is on the newer side. It's very intriguing. Like, I'm sure a million people out there are saying that now, but that's really where we cap it off. We're not really diving into office or retail or anything like that right now.
Awesome. John, where can people follow you if they're interested in learning more about you? Where are the best places to go?
Yeah, so I have all the social media platforms. I am very horrible at all of them. So the best way to reach me is shoot me an email. On our website, Toro REP, so Toro Real Estate Partners.com. There's a little investor questionnaire. You can fill it out and then schedule a one-on-one. Or you just shoot me an email at john, JOHN@tororep.com. Shoot me an email, reach out, feel free to ask any questions. That's the best way to get a hold of me. Typically, 24 to 48 hours, I'll get back to someone with, at least the time to jump on a 20, 30-minute call. It takes no energy from me or effort to give someone 20, 30 minutes. So anyone that wants to reach out, shoot me an email, and I will definitely get back to you and jump on a call.
Awesome. I really appreciate your time, and I hope everybody listening and watching this in the future, you got a lot of nuggets. I try to keep these short and sweet, but bring a lot of value operators that are doing it successfully so you can learn and grow your business. So thanks, everybody. We'll see you on the next episode.